Okay, looks like I'm live with bad lighting again. Unfortunately, it's the room I'm in. There's not much I can do. Let me see if I can get my angle right here. Yeah, that's the best I got. We will wait for YouTube to give me the signal that I'm live, although it appears that I see the counter going. It appears I'm live. Usually takes about 30 seconds or so. Oh, there it is. I'm live. Okay, let's I'm gonna put this over here because it's just gonna beep. Let's look at some questions. When you take a 10-year bond, what happens if you close it before maturity? Well, it depends on where interest rates went, right? So let's say you bought a 10-year bond and the yield to maturity when you bought it, just for argument's sake here, is 4%. Its price is going to be sensitive to its yield to maturity. So when you sell it, if the yield to maturity is 3.8%, it'll sell at a higher price. The longer you hold that bond, no matter what price you pay for it, it will be pulled to par. So if you buy the bond at, I don't know, 85% of its face value, over time that will be pulled to 100% because at par you get 100% back. If you bought it at a 4% yield and you sell it at a 4.2% yield, the price will be lower. But again, that will be pulled to par over time. If you hold it to maturity, you'll get the yield. How do you measure your portfolio performance if your net profit in dollars went up month over month or year over year, partly because you increased the total amount you invested? Oh, I see what you're saying. So, well, you can, yeah. So the time-weighted rate of return probably isn't going to be as useful as the money-weighted rate of return, which your broker should be able to calculate both the money-weighted and the time-weighted rate of return. Because if you're committing more money to your portfolio just before the market really goes up, well, that was a wise thing to do. Usually, as an investor in another fund, you will calculate your time-weighted rate of return. In other words, what did $1 grow to over a period of time? For your own portfolio, since you are in charge of when you commit money and when you pull money back, the appropriate measure for you is the money-weighted rate of return, which again, your broker should calculate. Money-weighted return is really just the internal rate of return. Seems the market's sole concern is Fed liquidity. I don't know if I'd agree with that. Otherwise, surely with all the global headwinds, Europe, China, East Coast ports, more caution would be evident. I think you're right. I think there would be more caution. The bulls may answer back with, there is more caution. That's why we're not trading at 25 times forward earnings. That's why we're only at 22 and a half. We'd be at 25 if it was a perfect world. Some may also answer that the market always climbs a wall of worry. What are you going to do? Keep pricing in the worry, right? So I would seem to think that there'd be more concern, but oftentimes most of what we worry about never comes to fruition. And I've made this statement before that the market is absolutely willing to price in a glimmer of hope on the horizon. Let's price that in. But if there are flames, a fire on the mountain peak across the street, well, somebody will put it out, right? And the fire comes down the side of the mountain, it's, well, somebody will put it out, right? Fires across the street, so, well, somebody will put it out. Somebody's going to put it out. Your front lawn's on fire. Well, somebody's going to put it out. I mean, they're going to have to. Not until the curtains are on fire do Americans leave the house being the market. So good news there only has to be a hint of good news in the future. Markets will go up. You could have bad news staring you in the face, and the reaction is, yeah, but we worry about all sorts of things. Somebody will deal with this. It'll be handled. It won't really happen, will it? So bad news actually has to show up. Would you buy the broader Chinese index here and ride the wave? Well, I think if I were a momentum trader, certainly, I think you'll have momentum for a while. I don't think that that's going to be reversed overnight. I'm looking at copper prices. They're volatile tonight. They've been up 17, up 10, up 14, up 10, they're back down, up 10 cents. So as a momentum trader, I don't really care about much other than am I going to continue to get momentum? As a fundamental investor, my answer would be no, because I know nothing about the Chinese market. And as a rule, I don't like to put money into things I don't know anything about, because I won't know when to get out, right? Easy to get in, hard to get out. Myself, no. For momentum, I think momentum will be there for a while. I think why I missed the Fed funds price term structure was mainly because I was solely focused on your views about the Fed cuts. Yeah. Okay. That's about the screen that I missed last week. Do tight corporate spreads justify lofty equity market valuations? Usually they go hand in hand. If you have a very good economy, there's very little credit risk. You'll have tight credit spreads. So you can take it from there that, well, if we got tight credit spreads, credit investors do their homework. The credit markets are not seeing anything, so maybe we shouldn't be worried. We can just sort of take it from there. So it is consistent. Credit spreads across the credit spectrum have been tightening, including high yield. What's the correlation here? Well, yeah. How would you start investing with all your current knowledge but no capital? That's a good one. No capital. At 30 with no assets, but your investing experience, how would you approach building wealth from scratch? Well, I certainly would have some sort of contribution plan. I certainly would have some kind of contribution plan. You'd have to. If I have no capital, but I have all this experience, and I'm 30, I must be worth a lot on the street. I must be worth a lot to a firm somewhere. And if I have this kind of knowledge, I should be able to demonstrate it. So being that I would be worth more on the street, that's probably where I would go. If I didn't have capital of my own, I would think about, well, how do I access other people's capital, right? On the condition that I had this kind of knowledge at 30, it's doubtful a 30-year-old would have this kind of knowledge. It's a lifetime of knowledge. I'm not saying impossible. It's doubtful. The markets are not like sports, right? With sports, you're always looking over your shoulder at the young kids coming up behind you. They're going to hurt you. They're going to put you out of the game. When it comes to markets, there's nobody coming up behind you. Oftentimes, not really anybody coming up behind you. All right, you get more valuable with age and experience. Everything I have read recently suggests a bearish US dollar viewpoint. I wouldn't argue against that. However, given the recent European economic news, it's hard to be bearish. It's hard not to be bearish to the euro currency. Your thoughts? I agree. Currencies are a brutally difficult game to play. Even for the pros, it's brutally difficult. There are good cases for U.S. dollar weakness as interest rates drop. You no longer need the safety of the U.S. dollar. There are good reasons. There are good reasons for U.S. dollar strength. It's still the best market in the world. it is, it would be easier if there was some supply and demand, some fundamentals you could look at and say, well, here's what we're seeing. No, there probably are in terms of FX swaps and or basis swaps. Sorry, not FX swap, but basis swaps. But it's not like anything else. It's currencies are probably the closest thing, if not actually a random walk. In other words, the next move is completely random, that there is no pattern to them. They are completely random. So they are difficult to play in that sense. I would be hard pressed to make a big bet on a currency one way or another, unless it was in aligned with positions I already held, and that the worst I could do is hedge. If the position doesn't give me an active return, at the very least it hedges me. But I don't think that I would take very large currency positions. Do you think entrepreneurship is a better path to success in the corporate world? You seem to advocate for the corporate world in work from home discussion, but I believe entrepreneurship offers better odds. Better odds? No, it does not. The failure rate is extremely high. Whereas the job loss rate is not as high as the failure rate. That if you took a job, you're more likely to keep it, or the probabilities would say that you'd keep your job longer than you would keep your business, just based on failure rates. So I don't know that the probability is better in entrepreneurship. The upside is significantly more, because every company can only have one CEO. But there are many businesses that can do well. But it's like, lotteries. Lots of winners every week. You see them all over the place, but you don't see the millions of losers. Lots of businesses start every year, and many of them don't make it. The vast majority, even venture capital backed businesses, what is it, 9 out of 10 really go nowhere? 5 to 6 completely fail, are just complete write-offs. Statistically, 2 or 3 are okay. We can get our money back out of these, and 1 or 2 will return something, with maybe 1 out of 100 becoming a big hit. And they're well financed. They're venture capital backed. There are millions of startups that don't have that kind of backing, that fail a lot. That you have a higher probability, if you start your own business versus getting a job, you have a higher probability of being in your job in 5 years than being in your business. So no, the odds or the probabilities are against you. But many people start businesses with, I got a neat idea. That is not the basis of a business at all. So let's think about breaking down that word idea. Much like we can break down the word luck. If you're sitting around waiting for luck to happen, you're missing the point of what luck is. Pasteur's dictum, right? Chance favors the prepared mind. Luck is when opportunity and preparation meet, and opportunity is everywhere. I've said this many times, the market is a giant money printing machine if you can find the opportunity. But you're not going to find the opportunity by saying, let me buy this, let me buy that, let me buy this, jumping around and gambling like you would bet on black or red at the roulette table. You have to read 10Ks. You have to educate yourself. And every now and then you come across a company where you say, oh, there's something here. You found opportunity. So you were prepared, and there was the opportunity. Great, there's luck. What's idea? Idea we can break down into the same thing, luck and opportunity. Idea is when a problem meets solution. Don't look for ideas, look for problems. Look for problems. Look for problems that everybody has or that enough people have, and find a solution for that problem that isn't being met in the marketplace right now. So if you have a bunch of problems in your head, that's the preparation part, is that's a problem, that's a problem, that's a problem, that's a problem. Your brain will work on things, and you may wake up when they go, I think I got an answer for this one. When a solution and a problem come together, that's an idea. Too many people say, hey, I got a really great idea for a restaurant. What if the menu were all like this? It's like, what's the restaurant a solution to? What problem are you solving here that isn't already being solved? So the vast majority of businesses don't actually solve any problems, and that's why they fail. If you want to be successful, look for problems and find solutions. If you want to be successful in the market, read 10Ks. Just educate yourself on what companies are doing and think about what their future looks like as you're reading through. Do they have a good idea? Do they have a good plan? Opportunity is everywhere. There is this study in entrepreneurship, or this field of study in entrepreneurship. Entrepreneurship is broken down really into two bodies of literature. One is about the individual, and the other is about sort of the context in which opportunity arises. Is where does opportunity come from? And it really is the combination of the two. Opportunity is everywhere. It's everywhere. There's no shortage of opportunity. We don't even have to ask the question of where opportunity comes from. It's all in here. It's all based on the individual. It's what you do that determines whether or not you're going to be lucky in life. As the old saying goes, I never really got lucky in life until I started working 14 hours a day. So if we're thinking about to answer your question directly, the path to success, on just a probability basis, it would be in the corporate world. If you have the ability to identify problems and find solutions, you'll be successful on either side. In my opinion, working from office is a waste time for a number of jobs. Working from office is a waste of time for a number of jobs. My job rewards tenure, not effort. Sounds like a union job. Working from home lets me invest in skills like applied level that truly matter for my future. Well, then you've recognized you're not in a job that you want to be in. And your employer, if they read that, would say, okay, I know what you're doing at home. That's the problem with work from home. If you would not have hired an external manager and managed the majority of portfolio yourself, what tax strategies would you use? Well, I'm not taxable anymore, but some of the income is. I mean, there's always withholdings on interest, withholdings on dividends. I would have made sure that all my bonds were zeros, were zero coupon bonds, were strips, principal only strips, because they'll have the higher liquidity. There is no coupon on the principal only strip, and you can't withhold a capital gain. I would have been less interested in dividends. I would have used a lot more synthetics to get access to stocks that paid a dividend. I'd make sure that I didn't get a dividend. A synthetic smuggles the dividend in the form of a capital gain. I would have done more of that. I probably would have had a large position just tracking SPY and TLT, because it's just, and I'm not doing this as a brag or a flex. I'm just saying it straight up. It's too much to manage and build a business at the same time. I can't do what I do and try to be fully invested with that sum of money all at the same time. It just can't happen. So a lot of it would be passively benchmarked to SPY. How do you ensure the odds are in your favor when investing for the long term and trying to beat the S&P? Well, that's everybody's question, right? I don't know that I would say try to beat the S&P, but I'd say try to beat the majority of money managers out there. You want to beat the majority of active managers, right? In which case, just get the S&P returns. After fees, most managers do not beat their benchmark. Most. Every year, maybe 20% over, let's say, a 5-year period. It might be 3-4% of managers over a 3 or 5 year period can beat their benchmark. So why not just get passive exposure, right? And markets spend most of their time going up. So you get the odds in your favor over a long period of time by buying a passive ETF and having a contribution plan and just reinvesting and contributing and buying at, wherever the market is. So you're going to buy on the long-term trend, which is usually upwards. What drives yields at the longer end of the curve? Well, the maturity premium is the big one in there, right? Is money that's lent longer should have a higher yield than money that's lent for a shorter period of time. And that will be based on probably the biggest driver is the real yield of what drives yields at the longer end. And the real yield is a function of the nominal yield and the inflation expectation. So if we have a disinflationary environment and potentially deflationary environment, the real yield will make up a larger portion of the nominal yield. But the nominal yield would be dropping simply because the inflation expectation would be dropping. So you'd have lower nominal yields, but a higher real yield. Under what circumstances would someone choose leaps over a synthetic option strategy? If they don't want any downside risk, synthetic gives you a linear payoff, right? The stock goes down, you lose. Stock goes up, you win. So you get a linear payoff, just like a stock. If you just buy the call, the most you can lose is what you paid for the call. But the higher the interest rate, the higher the forward curve that you're buying on. So if the stock price is here, the further out you go for the 50 delta for the at the money option is higher and higher because the option is centered around the forward price, not the current price. So if you're going out 2-3 years at very high interest rates, let's say, a 3-year rate, call it, let's say you had a 4% 3-year rate, you'd be going out from a $100 stock, you'd be buying the $112 stock. That would be a 50 delta, which means you've got to earn the risk-free rate over the next 3 years and then go above that to get the premium that you paid for the leap, because that 112 strike is not way out of the money. For the time period, it is at the money because it's on the forward curve. So I don't know that you'd lean towards that unless you had very low interest rates. And even then, I think you could do better with 1-year leaps, rolling them forward. Please name the best brokers in US and European markets for institutional investors. Well, I don't know what your definition of an institutional investor is. IB for smaller institutions, I think, if you're a smaller hedge fund, or any of the high street in Europe, they're called high street banks. In the US, any of the big investment banks, JP Morgan, Goldman Sachs, Morgan Stanley, those guys. Sitting for level 2 in November, work at a large bank, have a few years of financial analysis experience, but not related to investments, financial planning and analysis. I know to become a charter holder, you must have 4,000 hours of working. Any recommendations on if I should try to get in an investment role or wait until I pass level 3? Or does it even matter and I'm just overthinking it? You cannot get the 3 letters until you have the work requirement done, right? So I think that's all you have to think about is you can get the tests out of the way, but you can't get those 3 letters until you actually complete the work requirement. So I would seem to think if a door opens for you in that field, I mean, you're pursuing those 3 letters for a reason, I'm sure, not just bragging rights, but because you want something in the industry. So if a door opens for you, go through it. I don't know that I would quit my current job to look for another job, but if a door opens, take it, sure. What would happen to your duration position if core PCE picks up again towards 3%? Okay, so let's just say that it picks up towards 3%. I don't know that the Fed would increase rates. Let's just say worst case scenario, they're on hold for longer. It would not be helpful. I don't know that it would be damaging, but it would not be helpful. It would just mean that I've got to wait a little bit longer for my payoff. But usually the nice thing about duration or getting exposure to duration is duration usually comes with a yield. It's very rare that duration has no yield. So utilities have a very great dividend and they have options. TLT has a dividend yield and it has options. So if it's going to go sideways for a while, then you say, okay, well, I don't have delta moving in my favor. So let me play the options and double the dividend while I wait. I get paid to wait. Same with U.S. Treasuries, right? You get paid to wait. So that's the nice thing about it. If it works against me, it's like, okay, well, it'll take a little longer for it to get to where I want to get to. But it's okay. I'll just collect premium and dividends while I wait. I'm not a finance expert, and I've always heard a lot of negative things about trading. It depends on what the definition of trading is. When I hear younger people say trading, right away in my head, I think gambling, because it is just as addictive. If you're, when you first start in this game, it is just as addictive as gambling. And a lot that is passed off as trading is little more than gambling with stocks, and it's dressed up and passed off as significant because now it's called trading, right? After following your applied series, I found that selling puts is the best strategy for me. Okay, I see where you're going with this. The best strategy for you, or the best strategy given the regime that we've had? You had a market that has been going up, so selling puts has been a winner. So just because it's working for you doesn't mean it's the best for you. It just happens to be the strategy that matches the market that we're in. Last 2.5 months, I made 3,200 in realized profit. Oh, nice. 1,000 in unrealized on 15,000. Oh, that is good. That is a good return. This almost sounds like a comment, the comments that I delete under the videos. I'm expecting the next comment to be, I thank Miss Janie for giving me this advice. And then the next one to say, I'm surprised to see her mentioned here. And the next one saying, I started with 1 Bitcoin now. I delete so many of those stupid things. I'm now planning to advance my strategies, synthetics and more. I'd love to hear your suggestions and any precautions. The big precaution I would give you is don't confuse brains for a bull market. Understand that we have a bull market, and for the last couple of months, you could have bought almost anything or sold puts on almost anything and made money. That doesn't mean that you found something that works. It just means that the environment that we had provided those returns for you. But if the market turns, all of that, the selling of the puts will crush you, right? Because you got a small account. You might not be able to afford to have everything put to you. So my advice to you is be humble, be very humble, and give the market its due. That you did well, but that's not your brains that did well. You are part of that return, but a big part of that return is the market moved in the right direction, right? So be careful. That's all I would say, is just once you start feeling that you've got it all figured out, I got it all figured out, I'm going to start putting some TikTok videos out there and tell other people how I've got it all figured out. That's when the market decides to change regime and cause you some grief for a while. And it's hard to switch your strategy on the fly with the changing market, right? It's hard to do that. So just have a little humility. Say, I did well, but give luck its due. Say, I had a good market. I had good conditions under which I did well. And the motivation sometimes is when you're making that money is to make your bets bigger and bigger and to be more and more invested, because I'm missing the boat if I don't do it. Careful. Always stay cautious. Always stay humble. As I work and invest, I realize that I am saving in USD, which the government allocates suboptimally. I see that as wasted labor hours, since when I aged, looking back, that income would be worthless. Well, if you're just going to take your money and stick it in a jar in the backyard, in 50 years, that $10 bill might be, worth $1.50. Only buy $1.50 of what you could buy today. The purpose of investing, number one, is to beat inflation on an after-tax basis. You have two goals when you invest: is to preserve the purchasing power of the capital, number one, and to grow the capital base. So if you have inflation of 2% and you're in a 50% tax bracket, you must earn 4%, assuming that your returns are all taxed at your marginal tax rate. You must earn 4% to end up with 2%, to end up with constant purchasing power. You have to run just to stand still. If you want to grow your assets, you got to earn 10%, taxed at half, let's say, to get 5%, to get a 3% real return, because inflation is 2%. So you must always beat inflation. That's standard. You have to invest on an after-tax basis to beat inflation, just to stand still, just to keep the purchasing power the same. But the goal over time is that you would outperform inflation. This is why we have tax deferred accounts. Is you're saving for retirement, and the government recognizes that if we keep taking tax away every single year, it might be difficult for many people to maintain the purchasing power of their assets. So I'll tell you what, we'll tax you way at the end, so that to maintain the purchasing power of your assets, you really only have to earn 2% over time. But keep in mind, you're still going to be taxed at the end, right? But that's the deal. That's true in any country, by the way, that promotes inflation, which is every country. That is true in every country, not just the US. What are your thoughts on the war in the Middle East? Since I've been a kid, and we're going back to, heck, I was 5 in 1971. I can remember the news. The news back then used to come on at 6 o'clock. The National with Knowlton Nash. I don't know if anyone's old enough to remember Knowlton Nash. I've been hearing about unrest in the Middle East, the peace process in the Middle East, unrest in the Middle East, oscillating with the peace process in the Middle East, oscillating with unrest. For as long as I've been alive, this has been going on. What do I think about it? Wake me up when something is new. It heats up, it cools down. It heats up, it cools down. It heats up, it cools down. I mean, I'm not trying to be glib about it, but when something, when something has been the same your entire life, it's like the sunrise. It comes up in the morning, it goes down at night. At 2 in the morning, I expect it to be dark. On any given day, I expect to be unrest in the Middle East, right? It's your whole life that you hear it, your whole life. So what do I think about it? I think just another day, right? It's again, I'm not trying to be glib about it. You'd think that after well, 50, at least as far as I can remember. I'm 58. Even from the time I can remember seeing the TV at 6 o'clock and hearing about it. 50 years, at least for me, that I'm aware of it, a little over 50 years, you'd think, if you can't come to a solution, if you haven't fatigued yourself out with the tension and the hate and all, if you haven't fatigued yourself out on that by now, then there is no solution. There is no solution. It will just be like Old Faithful, that every now and then it erupts and we know it, and that's about it, right? It's been going on long enough that you would think that with each generation, there'd be a generation that says, we're sick and tired of this. We're just sick and tired of this. What are we fighting about anyways? Which one of Abraham's children were the descendant? Is this really what we're fighting about? We agree all the way up to Abraham, and then we can't live with each other anymore. Really, we can't figure that one out. Like, it's been going on for as long as I can remember. But what else? What can you think about it? What can you think about it? Right? It's sort of just, I think, part of the global culture at this point, which is a sad thing to say. But I think on this one here, the people who need to figure it out are the people there, not Europe, not the US, not China, not all these. The people who are there need to figure it out. If it means having one big fight and then it's over and you're all going to be friends after, because that's what happens in high school. You get into a fight with someone who and then after that you can get along, right? Maybe you just got to get out of the way. You got to get the other countries out of there, right? You just got to get them out of there. Let them figure it out once and for all. How long does it go on for, right? I don't know. What are your thoughts on it? Last round of interviews. Can you recommend materials for presentation? I have to prepare the role of the trading desk. The usage of the order management system. Well, I wouldn't know what order management system you're using. Order execution in fixed income. I wouldn't. This is very specific to something. I have nothing I can give you on that one. Microsoft and Tesla are investing billions of dollars to develop their own energy infrastructure. Not quite. Not quite. Microsoft is, I think it's, what company is it that is doing 3 Mile Island for them? They're going to be buying their power. They're going to have dedicated power. What they're doing is they're getting power suppliers to supply them outside of the regulated utility. So, a utility can supply a Microsoft or can supply a Tesla, but the assets that they build for that are not going to be part of the rate base. They're not going to get a guaranteed return on that, and they're not going to be able to charge their utility customers for that investment. That investment must be recovered directly from that customer. So these are unregulated assets. If a utility's regulated assets exceed 15% of its assets, in other words, its regulated assets are 85% or less, it's called a mostly regulated utility. But these won't be regulated assets. But they're not building their own and running their own. They're negotiating with energy companies that will supply specifically them. This highlights a growing demand within the utility sector. However, neither company is part of XLU nor collaborating with any of the companies listed in XLU. Given that these tech giants are building their own energy ecosystems, do you think XLU will perform as well as expected? Yeah. They're not the only ones out there. Yeah, I do. All right. It would be difficult for a Microsoft to run a nuclear facility on their own. They have no experience with that, nor do I think that they want to get involved in something like that. But I think they need a dedicated source of energy. What was more profitable for you, trading or entrepreneurship? Through being an entrepreneurship, hands down, because you're building value. Now, when you say what was more profitable, you need an exit strategy if you're going the entrepreneurship route, because you're dealing with one huge illiquid asset, right? Whereas in the market, you always have liquidity. And you don't have to work as hard, right? You can buy SPY and TLT in a 60-40 ratio, and you can go away, and you can go somewhere else and get paid value for who you are and what you can do. So you have to be able, in entrepreneurship, you have to be able to outperform a salary you would get somewhere else, and your asset has to at least outperform the market. Otherwise, you could have done better in the market, right? So it is, for me, it worked out very well, but that doesn't necessarily mean it always happens that way. But for me, it worked out very well. I wasn't late to the live stream. I mischaracterized the start time. Yeah. Let me know if that works, by the way. If your girlfriend accuses you of lying, you said you were in last night, but Heather saw you at the club. You can just say, hey, I didn't lie about where I was. I mischaracterized my location. I vote Liberal, remember? I don't lie. I mischaracterize. Let's see if you can get away with that. Oh, I'm dating a Democrat. They don't lie. They mischaracterize. He said, when interest rates are low, it's better to use a synthetic than margin. What about when interest rates are high? When interest rates are high, I'd say use in-the-money puts, right? Synthetics are expensive. I would use in-the-money puts, and I'd forget about buying the call. You can get a 75, 80 delta put. Is it always better to use the embedded leverage of derivatives than using margin? I think it is. I think it is, because the interest of the derivative is SOFR. Yep. Whereas the interest broker will charge you. No, the interest the broker will charge you is SOFR plus a spread. As high as 200 basis points above that spread. You'll always pay more for your margin loan, always. But with derivatives, you're getting interbank rates. Oh, it continues on. SOFR plus some spread. Is this reasoning correct? Yes, it is. Are you familiar with the Kelly criterion? No. Well, maybe I am. I just don't know that it's called the Kelly criterion. Do you think it's useful for capital allocation between strategies? I'd have to look it up. And looking it up, I might say, oh, okay, I'm familiar with that. I just didn't know it was called that. I might employ a game of tennis analogy in work tomorrow when I'm being annoyed on Microsoft Teams. I intend not to return the ball back over the net. Not if it's your boss. If your boss serves, you have an obligation to return that serve, right? Is it true that you know the secret to be above the efficient frontier portfolio? It's no secret, really. You find, if you have an efficient portfolio, you've done mean variance optimization over asset classes, you have a number of portfolios that are on the efficient frontier, you'll find the one, we're talking in a theoretical sense here, right? Your portfolio is a portfolio of risky assets only. Your risk-free rate is the intercept. You draw a line. The highest capital allocation line will have the highest Sharpe ratio. That's the portfolio you want. And if you want to be above the capital allocation line, you use margin, you use leverage. There you go. You are above. You are in the efficient portfolio above the capital market allocation, above the efficient frontier. It's no secret. But it's purely theoretical. What is the efficient portfolio? I don't know. Keep in mind that it is based on, much like forecasting the future, the efficient frontier and the efficient portfolio is based on a mountain of assumptions about the future distribution of return, the future type of return, the correlation between the asset classes, built on a mountain of assumptions. So it is your best guess of this variable and this 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 and all these variables. Here's my best guess. Here we go. And if my best guess works out, this I couldn't have done better than this. Your best guess will not work out, and you could have done better than this, no matter what you do looking at it after the fact. So all we can do is say, well, I live in a probabilistic world, so I will invest probabilistically. But keep in mind, this is all theoretical. It is applied in practice, but it is, to say that here's your strategic asset allocation. Yeah, you move them around 2-3%. Who's to say that that's not a better allocation, right? It is all based on assumptions. But do you think it is too late to start a gold position in miners? No, I don't think so. I've sold puts on Newmont. I've sold puts on in the money puts on GC, which is the gold futures contract. I think gold has a long run left to it. That if you fast forward 20 years, I think gold's 15,000 an ounce. That's a 12% annualized return on gold, right? It's going to have to go up. Unless demand drops off, unless demand for jewelry really drops off and demand among central banks really drops off, I think the desire for gold continues to go higher. I think lacking something, I don't know when, but lacking some clear technology on the blockchain that has some way of finding its way into people's lives, I think that will run its course. I think governments will recognize that it is a primarily a tool for money laundering, primarily a tool for crime, and that nothing really is happening on the blockchain. People are just trading these digital assets because we think I think gold will probably get more favor as you have more and more debt, which you're going to have. Okay, in democratic countries, democracies now are based on how much you can give away and how popular you can be. It's not about how good you'll be for the country; it's how good you'll be for me. What stuff am I going to get if I elect you? Well, gold, I think you're going to need. I think there'll be more and more desire to hold gold, and yields per ton have been dropping. There is no more the belief is there's no more tier one mine to find. So if you're going to turn resources into reserves, you're going to have to push the price a lot higher because it's going to become more and more expensive to get each ounce of gold. So yeah, I think over the next 20 years, you can go from $2,700 to $15,000. And that may seem ridiculous, but that's only a 12% return per year. That's all that is. So no, I don't think it's too late to start a position in gold miners when you combine a conservative strategy of selling 20 delta, 10 delta puts combined with the dividend that you get. It's a nice long-term hold. Where do you think Canada's neutral rate is? 0. Given CPI is already 2% target, it's not going to stop at 2%. Shouldn't they quickly lower it to the neutral rate? We're going to 0. Yeah. Mark hype. I don't know what that means. How do you manage balance between leisure activities and work? When you love what you do, it's all leisure. I mean, it really is. It's all leisure. I love puzzles. I love puzzles. When I was younger, I went through, you buy these magazines that are full of logic problems. I went through magazine after magazine after magazine of these things, one a month. And I kept looking for more and more and more difficult puzzles. The market's the biggest puzzle out there. Every 10K is a puzzle. Every company's a puzzle. Every industry's a puzzle. Every sub-industry's a puzzle. And I love puzzles. I love puzzles. Taking a company and figuring out, well, How would you forecast revenue? How would you tear this apart? And looking at the detail of these things. So really, I play games all day long. I play puzzles. I solve puzzles all day long. I love it, because if I didn't have any of this, I'll tell you what I would be doing. I'd be sitting in a chair somewhere, drinking a beer, because I probably would say, well, why not drink a beer? It's not like I'm ruining my day the next day. Drinking a beer, solving logic problems. Just having fun with that. I love those. And the harder it is, the more I love it. I love a puzzle that just stops me. Not big on crossword puzzles. You know why? You can't use logic to solve it. If you don't know the word, you don't know the word. Greek goddess that, flew over the moon. Fuck do I know who that is? You got to look it up. I'm not going to use logic. Let me think it. But, numbers problems, logic problems, like, Susie and Tammy live next to Dave. Dave lives beside so-and-so. He drives a red car, but then who has what? I love those things. The market is just one big puzzle. So I don't know that I have a division between leisure and work when my work is leisure. Any thoughts on carbon capture? I think it's an underrated technology. I think if you put enough money behind it, you would drive the cost per ton under $100 easy. But the greenies want nothing to do with it. The greenies want to get rid of all carbon-based fuels altogether. But even if you got rid of all carbon-based fuels, you still got to get that stuff out of the air. You still got to pull the carbon out of the air because we've already got the situation where it's already causing the glaciers to melt. So you got to get it out of the air. How else are you going to get that done? Carbon capture. So I'm a big fan of carbon capture. Oxy is building one of the largest carbon capture facilities in, well, of course, Texas, because, it's all about Texas, right? The stars at night are big and bright. Come on, everybody. Deep in the heart of Texas. For someone in their mid-20s, do you recommend just invest in all tech? If you're in your mid-20s, yeah, I would say don't worry about the S&P 500. XLK or QQQ would be the beta that you'd be looking at. Absolutely. Although if I would have said that to you in 1999, it took, I think, 16 years for you to break even. So it can run away with itself. With AI, it's certainly running away with itself. I think the build out of AI continues, but I think the benefit is a long ways off. I think the benefit is years off. You need something more than just AI in Siri or AI in a chatbot. I can't even stand the freaking chatbots that have AI because they don't solve any nonlinear problems. Bell sends me an email today saying, "Hey, we noticed you didn't pay your bill. I'm on direct. I have direct debit. You pre-authorized payments. You take them out of my account." So I went online. I checked it. There it is. I got pre-authorized payments. Why are you telling me I owe you money? Okay, so I paid it. So there's a chat. I click it open. It says, "Hi, I'm your chatbot powered by AI. How may I help you today?" And I know exactly what's going to happen. I have pre-authorized payments, but yet you tell me that I owe you money. What gives? Oh, here's a document that may help you set up pre-authorized payments. I know exactly what I'm going to get. Absolutely nothing, right? It doesn't work. It doesn't work. So I think the application is a long way off, and it strikes me as odd that all of the money that is being spent on this right now. Well, first of all, these large companies have no choice but to spend the money. You have no choice, because what if there is something there, right? You have no choice but to spend it. But I think it's going to be a long time before there's actually applications where you say, "Aha, I'm buying this. I need this. This works. Oh my God." There's some cute little things right now that kind of do something, but I don't think that people are ready to get rid of their whole customer service department just because they have an AI chatbot. It doesn't freaking work. It doesn't work. It's just more annoying than anything. I don't even start anymore when I see it. So QQQ or XLK may be at that 1999 kind of position where once this falls apart, it might take 10 years, 15 years for it to break even again. That's the danger there, right? I don't know that I would go all into that, but I'd certainly be more tech heavy in my 20s. I hope that answered the question. Is it possible the Fed lowers rates so more money would be spent in Q4 to delay the downturn we'll have? That's presupposing a lot, right? Presupposing that there will be a downturn. It's presupposing that lowering rates would even stop something that's in motion, because if raising rates works with a lag, lowering rates works with a lag as well, right? I don't know that. Well, the Fed is going to lower rates. The Fed's going to lower rates. The question is how much, 50 or 75 by the end of the year? That's the only question. But I don't think that anybody is in doubt that the next meeting is a cut. It's just we're in doubt whether it's 25 or 50. And the lowering of the rates is because inflation is coming down, and the economy is appearing a little soft. So they are satisfying the other part of their mandate. Market for 29th September or 30th September? Market for 29th September or 30 September? Mavendra Singh, I'm going to need a little bit more than that. I don't know what that means. Today is the 29th as I sit here. In Costa Rica, it's 6:12, which is 8:12 in New York City, which means we're less than 6 hours away from the 30th, which is Monday. So I'm not sure what all that means. What is your view on where USDXY is going to go in the next couple of months under both the Trump and Harris administration? Can you assume you're long? Can you summarize your long Mexican view? Well, I think that barring some external event, some exogenous event, global event where money needs safety, barring that from happening, I don't think the US dollar is going to strengthen from here, number one. So if we think about a chart on the DXY from where it is here, upside, I give very little probability to. So there's either sideways or down. If you have rate cuts, the interest rate differential is going to decrease with other currencies, but other central banks seem to be cutting rates just as quickly. The question would be, where would you invest other than the US at this point? Maybe China. Maybe China can draw some money in now that it's doing what it's doing. Maybe money gets drawn into its market. Certainly not Europe, but Europe is pretty sick right now. If we want to use an analogy of health, if they start cutting rates, now might be the time to enter Europe, right? Because we would expect that. Well, how about, it's not going to get much worse. Now we got rate cuts going on. We're on the path to recovery. Let's hit up Europe. Currencies, like I said earlier, are brutally difficult to figure out because you can always make both sides of the argument. You can find a bull case if that's what you're looking for. You can find a bear case if that's what you're looking for. You can find a neutral case if that's what you're looking for. So I think it is more productive to look at the US versus some other currency as opposed to just say the basket, the DXY. gun to my head, I'd say next 6 months, I'd expect a weaker DXY than now, but I don't know that I'd be willing to make a big bet on that. As far as the peso is concerned, it has shown that it's willing to hold the 20 line, and it does want to strengthen. It just has, some yen problems, because I think a lot of the carry trade went into the peso, and with yen strengthening, it's got to unwind. So the peso is probably being sold for that reason. But being that it has cheaper labor and it's on the same continent as the US, it seems to make sense. And it's part of the US North American free trade agreement. It seems to make sense that Mexico would be the beneficiary of foreign direct investment. That does not mean I'm going to be right. It's my best. It's my, when you analyze something, all you can do is say, I feel this, and you put money to it. It's either going to work out or it's not going to work out. That's all. And you hope that you're good enough that those that work out end up being more than those that don't work out. Thoughts on utilities play, given that big tech companies have been buying power plants outright this year? Do you see it as a continuing trend? The amount of assets that have to be built out, Goldman Sachs estimates it at 40% over the next, I think it was over the next 5 years or so, by 2030, 40% increase in assets, not to mention the replacement of the aging infrastructure that already exists. Every time you get into summers, you've got brownouts already happening. California, what was it, asking people not to plug in their Teslas because the grid just can't handle it. AI in all its forms, not just the big hyperscalers, but there are data centers that aren't dedicated to just hyperscalers, but to other data farms as well. That's going to continue. If you think that we're moving into a more digital world where we will have more devices, more things that need to be plugged in, more batteries in cars, whether it be plug-in hybrid or straight EV, you need more assets on the utilities. Yeah, I think it goes on for a while. I do see it as a continuing trend over the next couple of years, and the derivative, or at least the core of that trade, will always be copper. There is, for what has to be, and never mind Europe. Europe still has a huge build out it has to do in its energy infrastructure if it wants to meet its targets for, I forget what the name of it. There was a name of it, but to get most of their power, 70% of their power from renewables, they're a couple of years behind on getting that done. There's a huge build out there that has to happen. China is producing how many electric vehicles? Way more than it can use, right? This is why I don't know why everybody's excited about Tesla's numbers in China. There'll be no margin on it. You had the incentives to give them away. Who cares how many they sell? Everyone's overproducing in China right now. It's a glut. Well, you're going to need a way to power all those batteries. So it's, globally speaking, copper is a no-brainer for the next 4 or 5 years. Although there's no shortage of it today. Fast forward 3-4 years, $5 copper won't be that surprising. It'll be a deal. $6, $7, $8 copper per pound, I think, is reasonable. So yeah, I think there's still plenty to run on that. What would be a reasonable way for deploying 300K long position in TLT? Should I buy in tranches or just buy as many shares as possible in a few tranches? Well, I guess my question would be, well, what do you think is going to happen? Right? It has to be consistent with your beliefs. Now, Fed funds futures are looking like they are pricing in, I wouldn't say the Fed watch. Well, look at the probabilities. The median as we saw in the market outlook, the median is 3% by the end of next year. I believe that. If you have 3%, I think you get, that's 200 basis points down. I think you get 75 to 100 coming off the long end. At a duration of 16, that's a 16% increase combined with a 3.5%, 3% yield, 20% return. Do you believe that? Is your belief consistent with that? If it is, then waiting for an entry point also means that it could move on you, right? What I would do is I would look at the 101, the $101 puts for October. I'd let them be put to me, because if I sold the 101 puts, I'll probably have time value, which means I'll be buying my TLT lower than the market anyways. Then I would go out to November, December, January, February, and I'd sell 101, 102, 103, 104 puts, but you only have 300,000. So you can really only sell 30 puts, right? But you can sell puts and have them put to you. You sell them in the money, so they'll be put to you in such a way that you are buying cheaper than the market is today. Would China's ETFs make sense now? Oh, we have to define what you mean when you say make sense. What does that mean, make sense? Like when you say, does it make sense? From what perspective? I think you'll get some momentum there, but does momentum make sense? Sometimes it does, sometimes it doesn't. You know, Tesla has momentum that doesn't make any sense. The Canadian banks have momentum that seem to make sense. But at some point, it's like, you've sort of priced in all the glory for the next 2 years, right? So what do you mean by does it make sense? On a valuation basis, on a fundamental basis, on an expectations, on the momentum? I don't know. If you mean, does it make sense in the sense that I can buy it for this price and sell it for a higher price? I think you can. I think momentum stays there for a bit. Do you think that this is a golden era for mortgage REITs? I wouldn't say a golden era, but we're coming into what I think would be a good environment for REITs. Keep in mind what they were able to do over the last couple of years, right? As they brought on new bonds, they were bringing on those bonds with higher and higher and higher yields. So as rates go down, as that spread contracts, they're going to increase in value significantly more because they were bought at higher yields. Yeah, I think they can do quite well. Cherry on top is if they underhedge. Well, underhedge and increase their leverage. Right now, they should be increasing their leverage, not just underhedging, but increasing their leverage. That's the bigger thing, right? Going from 7 times leverage to 9 to 11 to 12 over the next couple of quarters, but they should be increasing their leverage at this point. Isn't momentum investing a joke since it only works as other buyers buy versus fundamental? Yeah, that's how it works. That's what momentum is. There is a saying, momentum is your friend until the end. All right? So, yeah, momentum works till it doesn't. That's right. Momentum works till it doesn't. What would be the better exposure towards copper, FCX or Southern Copper? I prefer Freeport. You know, I haven't done a deep dive in Southern Copper. I'm familiar with Freeport. I know what I'm buying when I get Freeport. I prefer it. Trump said that he will implement 100% tariffs on cars imported from Mexico. Yes. How would that change your position on GM? Would it shift your focus away from the automobile industry? You put 100% tariff, and you are going. There's a treaty. You've negotiated a free trade agreement. throwing 100% tariff on, I guarantee you, you're going to the free trade court, or there is a panel that hears these cases. Mexico would be well within its rights to take the U.S. to that panel and say, nope, it violates our agreement. So keep in mind that Trump right now is a desperate man. He went from pretty much winning this thing to almost a dead heat to slightly underdog at this point in some key states. There's a good chance he could lose this. There's a good chance he could lose it. He will say, and he is saying, not that any politician doesn't do this, he's saying whatever it's going to take him to get elected, whatever his audience is, that's what he'll say. You tell me who his audience is going to be, who he's talking to, and I'll come up with a couple of things that I bet you he says stuff like this, right? Put him in front of the Bread Association. We're going to put a tariff on any wheat coming in this country. American bread will be made with American wheat by American workers. We're not going to import any more bread, because that's what they want to hear. He'll say whatever they want to hear. Saying things and getting things done are two very different things. I'm not really too concerned about that. I am concerned about GM to some degree, because I am seeing that who's rather insensitive to price, I decided not to buy a new Denali truck because I refused to pay the insurance rates, 3.4% of the value of the vehicle. I refuse to pay that. I'm not going to do it. So I'll stick with the truck that I currently have. It's perfectly fine. I don't need a $100,000 truck. But I didn't do it because of that. What are other people doing? And again, I'm insensitive to price. So I think it is going to weigh on GM at this point. So I think it probably has more tough quarters ahead than good quarters ahead, but it is perfectly willing to use its free cash flow to buy back its stock. That's the savings grace of being in a position in GM. I'm getting a little concerned about it. I've seen many stories in my local mall offering more discounts, and buying is still low. People waiting to holiday shopping. Shoppers seem very picky these days with value. Yeah. Yeah. Costco, on the other hand, on their call said that the appliances and the big and bulky items led the way on sales. That food and sundries were slightly negative. Fresh foods were slightly positive, but they really made it on the big and bulky stuff that they're seeing. And the average cart, that's how you measure, growth in retail. It's one of the important measurements is, how many customer visits do you have, and what's the average cart size? The average cart, controlling for FX, was up a little bit, and that they're moving into big and bulky items. So sort of a different story there. Sold the ZQ to December 24 futures at 95,605. Fed funds target rate is always in range of 25 basis points. Do I take the higher or lower yield as a price target for my futures? Well, it's at 4.833. If you get two more rate cuts, you'll be ending December somewhere around 4 point, and this is December 18th, so half of that, because it's the average of the month. 4.48 and 4.33, 4.58, 12, 4.45. 95.55. You sold at 95.6. 5 basis points. I don't know. I'd hang out there for 5 basis points, because if they go 50, you're dead. I don't know that I'd hang out for 5 basis points. That wouldn't be enough for me. What's your take on crude oil and natural gas in the coming times? Nat gas, I think, there's lots of it. but it is the easiest source of power for utilities to scale up fast. It's the easiest one, and it's very reliable because it doesn't depend on whether the sun is shining or the wind is blowing, right? It's very reliable. So I think there'll be a good market for nat gas. Crude oil, the Saudis have sort of signaled that starting this December, they're going to increase production every single month, ending next year at 1 million barrels per day higher. The International Energy Association is predicting a glut of oil by 2028 of 8 million barrels per day building. If the Saudis start increasing production and fighting for market share and prices drop, Russia will just produce more oil because Russia doesn't need a price per barrel, needs a certain amount of revenue coming in to fund its war. Let's call it a war. I'm not going to mince. We're not going to try to figure out what word satisfies both sides. When people are shooting each other with guns, it's a war. Put whatever modifiers you want in front of it, but let's just call it a war. So they're just going to pump more. That could start a price war. I don't know that you'd revisit 40 or 50 or 40 or $30 again, but these things, once they get started, have a life of their own. I don't see a lot of upside to crude oil at this point, unless you get something happening in the Middle East, something significant happening, which shuts down the flow of oil coming out of the Strait of Hormuz. You shut it down. It would have to shut down. I don't see oil going up on its own merits at this point. Either it stays here or it drifts lower. You mentioned that currencies are difficult to speculate on in the short term. Yep. Would you agree that certain pairs are easier to forecast? If you're familiar with them, I've done fairly well on the peso and the Canadian. I've done fairly well on those, but I would not be playing like the Kiwi or the Aussie, only because now you're a currency trader, and it's not anything that I want to be, where I really don't have much of an edge. But it depends on what you're familiar with. You might be more familiar with some ranges, for a currency that's closer to you. Price target for TLT now. Right now, my price target right now is the price it's trading at. I mean, if you mean like right now, this minute, what is my price target? Whatever it's trading at. Do you mean like in a year, in 2 years? What's my price target for how long I'm going to hold it for? I was hoping for a pullback 96, 97. 96, 97. Well, where did it close? Let's have a look here. Stocks, TLT, 98.47. Look at Tesla, up another 263. That's just such a ridiculous. It's just a mockery of valuation, right? Or treasuries. ZB. No, I don't know that I would be waiting for 96 or 97. I'm not there with you. No. Well, I mean, I'm one person, right? With an opinion. I myself wouldn't wait for that price. I've sold puts on TLT already using the $100 strike. No, I'm not. I don't have a lot of conviction that I would see that. Again, that's just me. If you ask me what my 3-year target for TLT is, 150, 160. I don't see how we avoid the zero line again. I think that is where we're going. What are views on the big four consultancy firms? They seem pretty pointless in the way they operate. I haven't really given them much thought. I don't know that I have a thought on that. Can you please explain base effect and its importance? So base effect is, let's say that last year you had, let's say we're looking at CPI, and let's say last year you had a big jump in September in CPI, so that when we get the September reading in October, it would appear that you have a big decrease in inflation only because you had a big jump. But let's say that you had a big drop in inflation for last September in the read. That means any drop in that we get in October for September of this year might not look so great year over year because the base effect, because last year we're comparing it with where it was last year. So as it fluctuates year over year, that's called a base effect. That if you have a step down or a step up the year before, then it will dictate what it is year over year, because you are comparing it year over year, right? Opinions on BlackBerry stock, more specifically around cybersecurity. I haven't followed BlackBerry for a very long time. A very long time. I didn't even know they were still around. To be honest with you, I didn't know they were still around. Cheap stock. Well, cheap stock, probably good reason. I want to make an app for small business. The idea seems a good one. How to find people to make this app? I have no IT knowledge. There's plenty of people out there with app experience. There's plenty of companies out there that can build an app for you. They're out there. It'll cost you though. Finishing my bachelor's in finance this December, looking to work in corporate banking. How useful do you think the CFA would be for that sort of field? When we say corporate banking, I mean, obviously you work for a bank, you're going to be in lending. I guess the question would be, in what capacity? Usually you get the client, you say, okay, well, let's, how much do you need? I think we can work with you. You have the assets, you look at some numbers, and then you hand it to your credit department, and they take it from there. When somebody says, how useful do you think it is? It would be like saying, how useful is it to, learn, to read good literature? How useful is it to learn history? It's always useful, always. Knowledge is never wasted, because like I say, there's opportunity everywhere. And when you bring in knowledge from different fields, you're just preparing your mind to see it. If you're going to be in the banking system, if you're going to be in finance, I would say that it would be useful in recognizing opportunity. It is quite common for those in the banking system, after they've done a tour of duty in the banking system for a couple of years, to go to the corporate world, because they're more valuable in the corporate world, because you know how to talk to a bank. You've been on the inside. You know how to tailor our presentation and our statements and our package for the bank. You speak bank. So, it's a nice transition into the corporate world. Having the CFA, I think, makes you, more transportable that way. You remind me a little of Hugh Jackman. I'm going to take that as a compliment. Yeah, I take that as a compliment. I can't sing and dance. Well, maybe I can. I don't know. And I'm not much of an actor, but and I don't really have an Australian accent. I mean, that was a terrible one. How can I expand my customer scale when it comes to blue sky math? You're stepping on what's that guy's name? I forget. Breaking Bad. What was he called? I forget what he called himself. Yeah, I think that's you're making a reference to that, right? What's your view on when the IPO market will return? It's going to have to return soon. You've got how many? I think the last count was over 20,000, 25,000 AI firms that are venture funded at this point in the US. You need exit strategies for those. It's going to have to return soon. So lower rates, I think, will do it. End of next year. By end of next year, I think if the economy doesn't tank, I think if the markets hold up, I think you could see a nice robust market at the end of next year. I have a January synthetic short on Tesla. I wouldn't use a synthetic short. 200 put, 260 call. That's not a synthetic. That's a risk reversal. Was worried about a run up in price coming into their 10-10 event and sold 250 put rather than delta hedging. Was that dumb? I don't think so. You have momentum right now. It is going to do what it's going to do. I think 10-10 will be a massive disappointment. The promise was that every Tesla car can be a robo-taxi overnight, but the understanding is they're going to be introducing a purpose-built vehicle to show that has no steering wheel or pedals, which there is no market unless they have approval from an authority in one of the geofenced areas, which they do not. There is no national solution to that. And if you introduce that, then it's everybody that has a Tesla saying, whoa, I thought it was going to be the average car. Why are you not showing an average car? I think it's going to be a massive disappointment. I don't think their technology is there. I posted an article to LinkedIn. An independent company had tested their full self-driving and found that they had to do an intervention every 13 miles. So I think it's purely aspirational. I think they had to do something. I think they had to say something, but I think this is just it's just around the corner. It's just can we keep the hype cycle alive? I think their earnings are going to be, if they're even profitable, I think, margins are going to be under significant pressure. European sales are going to be down significantly. This robot business, that is purely aspirational as well. The idea that it's going to be able to do replace workers at the factory, that's ridiculous. You still have a union that's going to show up there. You still have that in its future. And no, I think October 10th will be a dud. But the hype before that, they're reporting their sales on Wednesday, and everyone's going to look at China sales, and if they're a record number, yay! The idea that it was all done on extremely low margin won't matter to the Teslites. They'll drive that price up, right? And the Kathy Woods will tell everyone it's an $8 trillion, $10 trillion, $20 trillion stock, because that's how she makes money, is to get you to believe that, so you push the price up so she can sell into that. This is gone beyond reasonable at this point. absolutely beyond reasonable at this point. There is a robo-taxi platform out there already called Uber, and there is a robo-taxi business out there called Waymo, and Cruise has not abandoned its robo-taxi. It's on the Uber platform. In China, there's no shortage of competition in that space. Tesla today is what BlackBerry was in 2008. Very, very late to the game, and the competition has blown right past them. They had the market all to themselves. That was BlackBerry, and then everyone showed up, and then it was over. And this is what I think you're witnessing here is a long slide down. BlackBerry had a cult following as well, but you couldn't fight the fundamentals when they started showing up. I think this is going to be a joke event. It'll be interesting to watch, but if you're short Tesla, I think you're going to have pain for a while. But I'm short by being long put, so that the delta now is very low. So every dollar up doesn't hurt me that much, and I agreed to lose a certain amount of money if I was wrong anyways. I can't lose more than that. How you recognize people? Mostly by their face. Why I always believe in a second chance. If a person makes same mistake 3 times, you let 3 times yet I like to give another chance to them. How do you recognize? Okay, you must stop the drinking game when I'm talking. I know you're playing a drinking game, and that every time I say a certain word, you take a drink, because that was written by a drunk person. How you recognize people. Why I always believe in second chance. If a person makes the same mistake 3 times, yet I like to give them. You're drunk, man. You need to slow down. Or you need to tell me what word you're drinking on, so I don't say it as much. Howard Marks is amazing, isn't he? Level-headed and clear, like just clear. No fancy talk, no bullshit, no nothing. Just clear to the point. Love that guy. Love that guy. Are there any other active investors you'd recommend? Cliff Asness, Howard Marks. I've been listening, and I avoided this guy for the longest time. I don't know why, but Jeffrey Gundlach. I've been listening to him lately, and other than being really bearish about things right now, I sort of disagree with him that a recession is going to happen purely endogenously. Who cares about the bad economic data? The bad economic data is good news because the Fed will cut rates, but he's a bit of a clear thinker as well. I kind of like him. Not like, if I had my choice, Howard Marks, Cliff Asness would be at the top more than Warren Buffett. Warren Buffett is just so folksy that. And I don't really get much out of him other than little statements that, it's kind of nice, but I don't really get the clarity of thought there. But yeah, you might want to look that one up. That one's pretty good. Question about the Applied series. Could you highlight where you plan to take the series in the future to help us decide whether it's a fit for some of us? So all I can do with the Applied level is I look at the views. Where are people viewing the content? When I started with the sector studies, especially with the understanding videos, all the sub-industries, the electric utilities, gold mining, copper mining, all that, views on that are way up there. So, people vote with their eyes with online learning. So you lean into that. The financial modeling is way above that I'm working on now with Costco is way above that. So again, you lean into where people are going. So there'll be more of that. There'll be more in the sector studies. I don't know that I'd be adding much more to the applied options, because options are options. Once you know the option strategies, you know the option strategies, that there just aren't new strategies coming out all the time. Once you understand them, you understand them. Portfolio construction, once you understand the major trades, you're pretty much done. I may add a series to it on being fully invested, active and fully invested. That's a different thing than being passive and fully invested, and being active and partially invested. Being fully invested meaning that you're not doing any kind of option selling at all. You're just running a fully invested portfolio. How would you manage that and produce alpha in that case? The future is really going to be around the sectors and the sub industries, and about more ways of thinking. Not so much when I say financial modeling, you get in your idea that, okay, it's Excel and we're going to learn all the really cool things in Excel. No, it's heavy on the analyst part, and lighter on the modeling part, because the modeling part, it's just Excel. Once you know how to build a model, you can build a model for anything. If the analyst gives you the assumptions to use, you can build a model for anything, right? You don't even have to understand much of how the analyst came up with things. But this is more about analyst to model. There'll be more of that. How would you model revenue for a mining company, for an oil exploration company, for a pharmaceutical company? Because there you do have to look at different things on how you would model revenue for a particular drug. How would you do it for a bank, for God's sake? How would you do it for a mortgage REIT? How would you begin to think about, well, how would I forecast this out? I think that has far more value going into the future. I will develop a certificate around the financial modeling module. Two of them, in fact. One is just a certificate of completion. And to get the certificate of completion, all you have to do is email me the final model, because I'm not giving you the spreadsheet. You got to build it yourself. So if you email me the final model, I can look at it and say, well, you did it. Here you go. And then a certificate of mastery, which would include some assignment or some written exam. And the sector is going to be a designation on its own, kind of like a level 4 for the CFA, but just far more real world, because it is real world. It will involve 11 sectors, and then a deep understanding of the 11 sectors, and two sub-industries, the two big sub-industries within each sector. So 33 readings. And I've already begun the process of converting some of these to a written chapter. I've already begun and investing money in getting that done. So there will be at some point a sector specialist designation and a financial modeling certificate. From analyst to model, not just the Excel part, but that and the full thing. Not just, and no manufactured data in these courses. You don't start with the assumptions given to you. You must develop the assumptions yourself. So it's going to be a lot of that. Now, if you're armed with that, you have the ability to be able to take any company and systematically think it through to figure out what you think its future will look like. That's kind of where I'd be going with it. Where'd I leave off? Oh, there it is. Signed up for the November 24 exam. However, I still have corporate issuers, quant economics, corporate issuers. You're going to do that twice in GIPS. Should I reschedule? Well, I don't know, because I don't know what your other obligations are. I don't know what your life looks like. I don't know if you have a family. I don't know if you have a job. I don't know how much time per day you have to give to this. I don't know how effectively you learn, how quickly you learn. So many questions that I would have with that. So it comes down to this: if you have the wherewithal to ask if you should reschedule, then you must be concerned about whether or not you can finish. And since you know yourself better than anyone else, and if you have concern whether you can finish, that concern may be warranted, then yeah, you probably should reschedule. But if you do, don't then just put the books aside and say, oh, okay, I got 3 more months, I got time, because you'll end up in the same situation again. In our 20s, we should buy growth stocks. Yes. Invest in index funds and mutual funds and just forget about it. Am I right? Well, you spelled forget about it wrong. It's forget about it. But that's okay. I'll let it go. Yeah, I think in your 20s, unless asset management is going to be a career for you, that you should do what you just said and pursue growth in your career and have a contribution plan over time, and that's what you should do. Sure. I'm up on a position by well over 100% on leaps. I believe there is still lots of upside. How should I exit efficiently? That's always a good question, right? Is that when faced with a profit, it is always a matter of, well, when do I take profit? If I take it too soon, I'm going to hate myself. If I don't take it soon enough, I'm going to hate myself. So there's only one outcome: is you took it at just the right time, which is very rare. No matter what, you're going to hate yourself. Usually as it goes up, you lighten up. You take off, you decide that, well, I'm going to take 20% of my position off, unless you only have one leap. Then it's a binary event. You either take your profit or you don't. You bought it, which means it's not a capital gain. Don't attempt to day trade this or to swing trade this, because if you do take your gain, you have a capital gains tax that you owe in April or whenever you're taxed. Which means that if you take it and it gives you the chance to get back in and you got a 30% rate, it would have to give back at least 30% just for you to be indifferent, right? So if you're trying to swing trade this thing on an after-tax basis, the swing would have to compensate for the tax you're going to have to pay by taking the gain. But sometimes the better way to exit leaps is, if it's up, you then sell a higher priced option. You find an option that's selling for what you originally paid for your first option, which means now this is all free, which means if it goes away, you haven't lost a single penny other than the opportunity, and it may keep running. For dividend investors, would investing in energy ETFs funds be good now since they're at a low price and pay a good dividend? Yeah, sure. Yeah. Without knowing which one, sure. How much getting a CFA helps with job prospects? Would it help to break into the finance industry? Help, yeah. Here is what it will do, and here is what it won't do. It won't guarantee you a job at all. It will give you an advantage on getting in that room, right? And that's what you got to do. You send out a resume, you either get an interview or you don't. If you send out 100 resumes, you get no interview, there's something wrong with your resume. You send out 100 resumes, you get into 20 rooms, you get no job, there's something wrong with you in that room. You can increase the probability of getting in the room, or at least not getting in the reject pile, by having more qualifications, right? So if I get 100 resumes and 40 have some CFA experience and 60 don't, and have no real world experience, well, those 60 are going in a pile that I don't want to talk to, because I've got 40 with at least a demonstration of some ability. More than that, what it shows me is a willingness to put in the work, because you don't have to. You don't have to do any of that stuff. If I do see that on a resume, I think, well, you didn't have to do this and you did it. which tells me you're not afraid of putting in the work. It says something about you in that respect. By not having it, I think, well, you're up against other people who have it. So you have to think, what are other people doing? And unless you have the right last name, unless you have the right contacts, unless you went to the right school and you know the right people, you're going to need every advantage that you can get. It is something that gives you an advantage, and every advantage matters. Now, if you say, well, I have a MBA from Wharton in finance, I would say, well, then you probably don't need the CFA, and you probably know the right people. But then you wouldn't be asking this question, right? People from Stanford, Wharton, Harvard, they're not asking me how to get, if I take this, will it improve my prospects for getting, they're not asking because they're already placed. What's their placement rate at those schools? 100%, multiple offers. Unless you were at a school that had that kind of social network, you're going to need every advantage you can get. Are you bullish or bearish on the microcap market right now? It depends. It depends on what. So on the group as a whole, I don't think I'm bearish, but I'm not bullish. It'd be like, yeah, I don't see the upside there yet. I don't see the upside, but there may be some winners in there. Is S&P a vehicle to maintain purchasing power? Yes, it is. Or do you use real valuation creation investing in S&P? S&P is good enough. S&P is good enough. It was the National with Peter Mansbridge for me. Oh, yes, Peter Mansbridge. You got to go back to the 70s to find, 70s and a little bit of the 80s to find Knowlton Nash. Google that. Yeah, I mean, not Google, but YouTube it. YouTube the National with Knowlton Nash, and you'll see what I mean. It was a very simple set. It was like a desk in the middle of a room. That was it. If we don't know what is good news or bad news, how will you interpret them as what it is? Well, that's a problem. A headline comes out and you think, is this good or is this bad? That highlights to you that you don't know enough about the company you're looking at to know whether it's good or bad. You should be able to tell for yourself. The market will have a different interpretation, or it may have the same interpretation. That's what makes this such a big puzzle. Is, do you get pushed around by the market when news comes out and a stock sells off? Do you get pushed out of it because you think, I better get out? Or, are you willing to push back? Are you willing to say, no, you guys are way wrong. I'm in. I'll take this. Thank you. Come on. You got to know your target. Otherwise, the market will push you around. I was wondering what master's degrees you have. I have an MBA, one master's degree, only one, and I have a PhD, which is not a continuation of a master's degree. A PhD is a research degree. An MBA is a professional degree. Those are two different things. One prepares you for the real world, or at least it purports to prepare you for the real world. The other one prepares you for a world of researching. Two very different things. So it's not like it's a continuation. Do you have a moderator that deletes questions? Nope. Some of my questions around election and China seem to get deleted. Do you think it's YouTube algo? I don't know. Try asking them here. Let's see what happens. But no moderator. The only things I delete are people who say things like, I have been concerned about the market for some time, so I sought out some advice from Miss Wendy, and she's been wonderful. I started with 1.3 Bitcoin. Now I have 7. And then somebody else will come and say, I'm surprised to see her name here. I've been with Miss Wendy for blah, blah. I delete that shit. I know that none of you listening are dumb enough to actually click on any of those links and go to Telegram and say, really, here, man, I know you're not dumb enough. It's trashy shit. It's a spill in aisle 6, and I'm just going to clean it up, right? I don't want that stuff in my comment section. So I delete it. Those are the only things I delete. You mentioned you didn't know your parents. Well, I didn't know my father. I knew who my mother was. I'd met her once a year for once a year is no big deal. Who was your role model and what motivated you to develop and study? Yeah, I don't know that I had a role model when I was younger. I think anybody's role models when they're young are either a movie star or a rock star or something like that. But you see yourself kind of like that, or you want to be seen like that, or you wish you were like that. For me in my early 20s, it was Marlon Brando, but early Marlon Brando on the waterfront. Marlon Brando. Not the later Marlon Brando. Role models. I didn't have a lot of direction in high school, and I didn't have a lot of direction in my first undergrad. I just didn't have a lot of direction in life. Then I met a girl, and then I lost a girl, and that gave me focus. That gave me direction. A lot of focus, because I resolved at that time to become everything I wasn't that she wished I was. At least, and in your young mind, you think this'll do it, right? And then I became all of that. So I guess I have somebody to thank for that. But I didn't really have a role model. I guess she was probably my best role model, because I spent, I don't know how many years attempting to live up to an expectation I thought she would approve of, right? So, who cares where you get your motivation from? So that was more, I guess you could say that was more internal than anything else. As far as moral compass, I'm not going to say that I've always been the most honest person. I mean, when you're a teenager, you do stupid things. When you're in university in your early 20s, and enjoying the parties, you make bad decisions. You do stupid things. The key to all of those stupid things was I felt bad about it. If you don't feel bad about mistakes you make, is because you lack the ability to recognize that, or maybe you have a different moral compass, or you measure your morality in a different way. A sociopath never feels bad about anything they do, even if they hurt people. They just don't feel bad about it. So I didn't live, I'm not going to say, well, I was perfect my whole life. I never made a mistake, and I chopped down the cherry tree. I cannot tell a lie. I've told my share, mostly to avoid getting in trouble. I didn't lie. I mischaracterized, sorry, the new language. I never lied to anybody. I mischaracterized my actions or my presence, or who I was with. I mischaracterized it all. When you get a little bit older, as you age, it becomes more important how you conduct yourself. At least it should become more important. When you are successful, there is, and this is an old term that goes back to Europe, called noblesse oblige. It is, if you are a member of the nobility, you have an obligation to act nobly. And I do believe that's true, that if you are successful in life, and you have been successful, you have an obligation to behave in a certain way. So I do at this point. It's just something, and I mean, I think about things carefully before I do them, and I don't cross lines. Or at least I try not. I try not to cross lines, but you don't always get there. I would say that you're well on your way to being a good person, even if you make mistakes, if you feel bad about the mistakes you make, especially if you hurt people with the mistakes you make. If you feel bad about that, you're well on your way to becoming a good person. That you have hurt people, whether they be family members or people you care about, that you have hurt them, is a normal part of growing up. You're going to hurt people with your actions, with your words, with things you do and say when you're young. You're going to, because you're an emotional human being. And a lot of times you hurt people out of anger. Case in point, you can all, raise your hand if this is you. Have you ever gotten into an argument with the person you love and said something in the heat of anger that after it's over, you thought, I didn't mean that. But you kind of did, but you didn't. You didn't really mean it, so you apologize. And that's to someone you love, right? If you don't feel bad about it, then you have to look into yourself and say, well, what am I missing? But if you feel bad about it after, I would say that don't worry about where you're headed. You're on your way to becoming a good person. That's probably a longer answer than you wanted. As a father of a 3-year-old kid, I want to make sure my daughter also has a strong moral compass and understanding of what is good and bad. So I want to hear about your experience. So growing up, I had incredible freedom. I had no curfew, much past 11 years old, 12 years old. I had no curfew. I could disappear for days on end and no one would say a single word. My grandmother wouldn't say a single word. I had incredible freedom, but not a lot of maturity and not a lot of role models to determine how you should act. So you got to figure out a lot of it yourself. So I made a lot more mistakes than I would have liked to have made. However, I think it's important that I did make some mistakes. All right. It's important growing up and maturing that you do make mistakes. You have to make mistakes. Otherwise, how do you develop? How do you grow? I guess, I'm not a parent in any way whatsoever. I would say, at some point you have to let that person be free to make mistakes. And that is how they will grow. They will model your actions very closely. And what you feel is important. It is a tie that I don't want to say a tie that binds, but it really is. It's like, an elephant, a baby elephant with a chain on its leg. It'll pull and pull and pull and pull and pull to the point where it gives up, such that when it's an adult, you could just put a string around its leg and it will have just given up. Children will model your behavior. So if you are, conscious of the image you're portraying, they will, for the most part, model that, but they are their own individuals. You have to leave them free to make their own mistakes. I would say that my concern about how I treat people really stems from a lot of it stems from, how I was treated sometimes. And I thought, how can people treat other people like that? Why? I'd never do that. Same in business. I look at how some businesses treat people and I think, but Why would you ever do that? I could never do that. Yeah, just either I think you either have it in you or you don't. So you interpret the news as what do you think, or how other people think, or what the market thinks or reacts to it. No, I put it into the bigger picture of what something is. Sometime, I'll have an idea of what I think a company is capable of or where a company is going, and the news, I don't, even if I'm bullish a stock, some news stories aren't really that great. And some events, I would say, well, I don't have a lot of faith in this lasting. That this is not really, a basis for me to invest more. So it depends, I'm trying to come up with an example. Well, okay, so Bell Canada sold its sporting assets because it has TV stations, radio stations, which I don't think it should have. Get rid of that stuff. Sold its sporting properties to Rogers for $4.5 billion, and the stock popped on that, and then it sold off. Why? Why did it sell off? So the market sold it off, and I thought, well, why? This is exactly what they said they would do, is they would sell assets, non-core assets, to reduce their debt. They've just sold that one was 4.5. They sold another one for about 5.5 debt reduction. That's 10% debt, a little more than 10% debt reduction that quickly. So I bought more. I sold more puts. I did a synthetic. I leaned into it because I think the market had it wrong by selling it off. So there's a good example of, this is consistent with what they said they would do. Why are you selling this thing off? Just got the applied level yesterday. Very satisfied with the content. What stocks, ETF should I be sticking to with an account size of 2K? Ooh, with 2K, I don't know that I would go much outside the market itself. And, don't worry about the account size. Your main concern right now is what's your contribution plan. Every quarter, how much are you going to contribute? Buy a broad-based ETF that tracks the market, but have a contribution plan over time to keep increasing your assets under management. Any advice on pitching a hedge fund strategy to a fund of funds or to an institutional investor? Yeah, you should be very clear on what it is that you can do that nobody else can, or not so much that nobody else can, but what you can do very well. What inefficiency, structural inefficiency, are you taking advantage of, and how are you taking advantage of it? Is it repeatable? Is it scalable? That's the big thing right there, right? Is that you have something, you've identified something, it is repeatable and scalable, and that you have the capability of getting it done. And showing a track record will also help you as well. They are probably going to ask you questions about your investment process. How do you determine a stock is right for investment? Walk me through your process of how you arrive at a stock. So you better have some idea of what your process is, other than, well, I listen to a couple of people and that's where I get my ideas. That's not going to work, right? Do you think it's possible for a Great Depression to happen again? No. Or are there too many safeguards in place? Way too many safeguards in place. One of the reasons that depression happened was the information that was tracked at the time. There was no unemployment information that was tracked, so it wasn't paid attention to, right? Because, well, who knew what it was? And that much leverage is out of the system. There isn't this 10-to-1 leverage that there used to be anymore. So no, I sincerely doubt that could happen again. I'm not saying never. I sincerely doubt that could happen again. central banks are far more willing to flood the system with liquidity and buy assets. That didn't happen in 1929. Possible, okay. But in Canada, you can deduct interest in investments, which puts you ahead. What rates are? Okay, well, yeah, you can deduct interest from your gains, but think about what you're saying is that you can deduct it from your gains. So it doesn't put you ahead because you still have to pay the money for the interest. You have your gains and you can deduct it from your gains, but you still had to pay the money. It's like me saying when I was in Canada, I got a 53% tax rate. So if I hire someone for 100,000, it only costs me 47 because I save 53, but I still must spend 100,000, right? So at the end of the day, if I didn't hire the person, I'd be out 53,000. If I hired the person, I'm out 100,000. Do you see the difference? I mean, I'm only out another 47, but I am out the 100,000. So you can't just say, unless the tax rate's more than 100%, you're still out the interest that you paid. Isn't there no limits to U.S. budget debt? It doesn't seem like there is, right? They have the power to increase the budget per infinity. Yeah. Deficit is massive. It hasn't caused massive inflation yet. It won't. What's going to change that? Nothing. I don't know that you're going to get the inflation without a significant shock to the supply channel, which maybe the port strike might be able to do, if they don't reach a resolution in the next 27 hours. Yeah, blockchain is money laundering, but I don't know how you can stop it. Yeah, neither do I. With Tesla having a known catalyst with a known date, why didn't you wait till right around that date to initiate the short? Because I didn't think that it would go up to this extent. I didn't think the shareholders would be so bloody gullible to be brought into this thing again, to not think things through. But this is the Tesla shareholder, is what's right in front of their face. That's all they see, is what's right in front of their face. And if you take their hand away, it's like, nope. You take that, nope. And you can't convince them of anything else. What is driving Tesla stock price is just the sheer amount of calls being bought. So to hedge, the market maker has to buy the stock. These are not people with a vested interest in the stock as part of ownership. This is gambling. This is just gambling on momentum. That's all it is. They're not thinking it through very clearly, and I will be right in the end. I will be right. My puts are for December. You got two big fundamental events. You got the disappointment over this robo-taxi thing that's going to show up on the 10th, when you see there is no robo-taxi. There's only pictures of it and maybe a mocked up car that's driving on a closed track with somebody controlling it from behind the scenes somewhere. It's going to be, I think, a rather disappointing event. And then you have earnings, which will be, I guess you had to really discount a lot to get all those China sales, right? Yeah. Look for, I don't know, 20 cents a share, 10 cents a share, negative 50 cents a share. But this is not it's a shrinking company. It's been a shrinking company for a while. I will say the battery storage is the bright spot in there, but putting a $50 billion valuation on the car company would mean putting a $800 billion valuation on battery storage when it only does $5 billion in revenue a year at 25-point margins. Who the hell would ever pay that? I mean, a Tesla shareholder, I guess. I don't know. It is the toughest stock in the world to short because the fundamentals keep showing up. And for the last 2 years, its margins have gone straight down. For the last year, its volumes have gone down, but still, it's not a car company. It's an AI company, even though it has, it doesn't make any money at that. It's a robotics company, even though it doesn't make any money at that. It's an energy company, even though only 3% of its sales come from energy. Look, if 95% of your sales come from selling something, maybe you are that. It is a car company. I'm okay because I bought puts. All I can lose is what I originally put up, and I was willing to lose that. I said, well, I'm comfortable if I lose this. I just don't want my losses to continue every day it goes up. I'm okay with it. Should the U.S. not produce so much oil at home and just import as to not worry about running out before everyone else? No, I don't know that I would. No. It's not the U.S. that produces it. These are private companies with shareholders that produce it. The U.S. itself doesn't produce any oil. The U.S. government doesn't produce any oil. It is private shareholders, privately owned shareholder-based companies that produce the oil. Oh, somebody's coming back from the Caribbean. They were there this weekend, big accident, and they're going to be late. I got to open the gate. So we'll see what happens. Hang on, let me see if I can answer them first. I will leave the clicker with security gate. There we go. Took care of that one. All right. What's your favorite beer? I don't drink alcohol. When I did, I preferred dark beer, Guinness, by far. Guinness by far was my choice. I love Corona, Sunbrew. President's acting like it's a great thing producing so much U.S. oil than selling it overseas. Again, the politicians, the U.S. government don't produce any of this oil, so it's not theirs. Sounds like you're supportive of the market continuing to run higher, since there's no obvious catalyst for it to crash. Well, supportive. I don't know if I'd say I'm supportive of it. Feel like the movie is to buy calls since it protects my downside. Yeah. I mean, I'm long certain stocks that I feel comfortable owning. I'm still short ES, although it's becoming uncomfortable to be short ES. But every time I see strength, I say, well, it just allows me to buy more of this other stuff here that I like. So my account balance does keep going up. That's all I care about. I'm looking forward to this earnings and guidance to see what companies expect and if growth will continue. Started watching your market outlook videos, and I noticed that you mentioned some technical analysis terms in it lightly. Out of curiosity, may I ask if you have had a change of opinion? Nope, I have not. Remember calling AT&T support 10 years ago and a human would actually fix my problem. Now it's a bot that just redirects me to a human anyways. Yeah, 5 minutes a waste of time. That's exactly it. It's 5 minutes a waste of time. That's it. What do you think of covered call ETFs as a small portion of my portfolio? Depends on the delta. Many of them use a 50 delta. and then they just simply take the loss and then sell another 50 delta. So they end up underperforming in bull markets. So, if they're doing 50 delta calls, not so much. If they're doing 30 delta calls, sure. What do you think about rate cuts historically being bearish? Rate cuts were historically bearish, usually because rate cuts happened because the economy was falling apart. So the Fed was playing catch up. Don't know that they're playing catch up at this point in time. The economy is showing some signs of slowing down, some signs, but initial jobless claims of low 200,000, GDP, second quarter GDP of 3%, job creation every single month. I don't know if you'd want to call that a slowdown. It certainly isn't the conditions under which you would accelerate 50 basis point cuts. But here we are. Have you watched The Big Short or Margin Call? I think Margin Call, but not The Big Short. Any suggestions how to get duration exposure in US 401k? Oh my God, there's no shortage. Utilities, TLT, treasuries, no shortage. I haven't seen a tea with you for the past few Q&As. Oh, that's interesting. I recommend an organic white tea during the day and something calming like chamomile. I call it camel meal, but yeah, I have chamomile at night. I do have that at night. During the day, it's a chai, for the most part. I drink more coffee these days only because I don't eat till 3 in the afternoon. So around 1 o'clock, I need something to cut my hunger. Coffee tends to do it. For the ZQ futures mentioned earlier, is it advisable to roll it into later dated futures to recoup losses, or is the short treasury play no longer available? Well, I just think that December ZQ doesn't hold a lot of gain. You'd have to get a 25 and a 25 just to squeeze 5 basis points out of it. I don't think the December futures holds a lot of gain. What is the annual target return in your portfolio? 20%. Is it a target return of 30? Too aggressive for a retail investor? I think you should consistently earn 15 and then move to 20, then move to 25. I don't know that I would swing for 30% because it's going to force you to take bets that you're taking only to hit your target that you may not truly believe in. I don't try to get 20%. It just so happens that the strategies I use, I end up pretty much around 20, 21% almost consistently. But I'm not trying to hit it. I'm trying to make good decisions, and I just end up there. You once said you wanted to live a long life. Who doesn't? Hence the weight loss. Yep. How do you imagine your older life? Kind of the great Charlie Munger investing in the markets until 99 years of age. I don't know, 99. I don't know that you ever leave this game. I don't know that you ever leave it. Yeah, so, if I lived to 99, I'd probably, and my mind is still there, I'd probably still be doing this. I don't know. Again, I don't know that you ever leave this game. Would investing options in transport companies be good now? I wouldn't touch ocean. I just wouldn't touch it. Not with all like the order book is fairly full, and a lot of these ships are going to be hitting the market in 2025, and the recycle rate is way down. So you have more and more ships on the water. I think shipping rates are probably the best you're going to see right now. You have the Panama Canal, which will be pretty much taken care of, or is pretty much taken care of now. Yeah, I wouldn't touch ocean shipping. I don't know about the others. I really haven't looked into them. If I had to pick one, uh, I don't know. You're asking particularly about the ports. Well, what it will do is it will raise shipping rates because the getting to the West Coast, the trip is just longer. So it will raise shipping rates. But then if it's over, they come right back down. Do we have until the end of the day, 30th September, to buy the apply? Yes, you do. Make sure you do it by New York time because that is the time they're on, New York time, right? Heisenberg, there it is, Heisenberg. Yeah, that's the guy's name. Why do you think it seems like the CFA is far less valued in the US than the rest of the world? I've noticed high finance jobs in Europe, Asia, and even Canada all highly value the CFA. I don't know. It's a good question. Is it Ivy League gatekeeping high finance? Well, the big banks recruit from the big schools. So, you don't get into Goldman Sachs from Bowling Green University, right? More of a person, or what's in Bowling Green University? It's not Bowling Green. Was it they call it Florida University or something like that out of Bowling Green? I forget. More of a personal question. Which universities did you get your degrees from? My PhD is Case Western in the US, small graduate school, mostly graduate, very little undergraduate. And undergrad Brock University. That's yeah, in the 80s, back in the 80s. I noticed my city metro buses are mostly electric now. It says on the side. I prefer that versus convincing people to purchase EVs. Don't have fast charging affordable. What's the correlation between gold and the SPX? I don't think it has a correlation. That is the sort of the allure of gold, is that it is an uncorrelated trade. Tim Walsh's lie is benign and diddly squat compared to the many lies of Vance, cats and dogs. Yeah, it's going to be an interesting debate. Do you think majoring in econometrics, quantitative economics, is still worth the degree? Econometrics is really just regression applied to economics, especially when it's and a lot more time series work in econometrics, especially when it's essentially competing with engineers and AI tech. I think you're right. I think on a lot of that very easy, I shouldn't say easy, but it's easy for an algorithm to handle that. AI, I think, can handle that quite well. Yeah. What strike did you sell your TLT covered call? 101. Why? Because I don't see it going above 101 by mid-October. Pretty simple. Oh, wrong mouse. You ever smoke cigars? I smoke nothing. I smoke no cigarettes, cigars, marijuana, nothing. I do no drugs. I drink no alcohol. Fairly clean life. I disagree. A PhD is a continuation of a master's. Nope, it is not. Smart people will apply for a PhD program on their way to getting their PhD. They've earned the master's. Well, okay, so it's not a continuation of a master's. It's just very difficult to go from an undergrad to a PhD program unless you're a superstar. It's very difficult to do that because first of all, you're going to be researching in a particular field. So you're going to have to be aware of the knowledge in that field. The master's degree usually is the demonstration of the knowledge of the field. The PhD is more about research methodologies. It doesn't teach you anything more about finance. It doesn't teach you anything more about economics. It really is research. I mean, I've done a PhD. I can tell you it is not a continuation of a master's degree at all. There is no time spent in learning any new content. It's about research methodologies and getting yourself familiar with the literature. Thank you very much for the applied level extension. Looking forward to learning about CrowdStrike and modeling a currently unprofitable company. Don't know that we'll model CrowdStrike, but we're certainly going to use it as an example. You need an example company to be able to, once you discuss the industry, you have to show how you can now understand the 10K of a company. But while I'm presenting it, I may say, okay, well, how would we, if we were going to forecast revenues, how would we do it? I don't know that I'll do a full Excel model on that. Paper portfolio built out for months with backed research. Does that look good on a resume? Yeah, I think so. Watching live at 6:30 from rural India. Oh, how's the weather? It's raining here all day. But that's Costa Rica. It's just going to rain till, I don't know, mid-November. Waiting for CFA level 3 results, but I do feel I did not pass this time. Is it recommended that I continue studying the same material? You really can't, because the next earliest exam date is February. That's the 2025 content. It is different. Unless you take the portfolio construction pathway, then it's the same. Which I strongly recommend. Where do you see SPY end of year, assuming no exogenous event and another 50? Well, the consensus is 6,000, and the more comfortable the market gets with 6,000, the more likely 6,000 it will be. We're at 571 on SPY going to 600. I don't know if we go 570 to 6 or you go 570 down to 550 before you go to 6, but if the market is expecting 6 and everybody believes that 6 is in play, no one's going to sell until they see 6. What is an elevator pitch answer to a medium-term market outlook? You want me to create an elevator pitch for a medium-term market outlook? I don't know. I'd have to think about what I think the medium term is, and I'm off the top of my head, I don't know. How can any educated person vote for Trump? It baffles me, the lies he puts out. Well, he's a politician. All politicians lie. Some not as blatantly as Trump, but they all lie. They all don't give a shit about you. None of them give a shit about you. It's all about them. That's pretty common with politicians. Very rare is somebody there to serve the public interest. They're usually there to serve their own interest. You're just someone on the way. They'll say stupid things to you, not because they're stupid, but because they think you're stupid. These are rather disgusting human beings, politicians. So they all lie to some degree. Oftentimes, you don't vote sometimes for the party that you vote for because you support them. It's just you cannot live with the other side any longer. I think the Conservatives in Canada are going to get a lot of votes, not because voters back everything the Conservatives in Canada want to do, but they just can't allow this kid to continue on with his woke bullshit. Sometimes it's just you've had enough of the other side that you're willing to vote for anybody, right? You mentioned that the 6.42 trillion of money market is not all waiting for equity, right? In your opinion, what portion is, and what point it would move to equity? A good question. Money market funds don't go to zero. So there's 6.4 trillion in there, but they don't go to zero. So some of that money is right where it belongs, in the money market. A lot of it is right where it belongs, in the money market. Some of it probably belongs to the bond market. Some of it probably belongs to the equity market. How much I'd just be guessing. And why is it not there yet? I don't know. Probably for the same reason I'm not fully invested, is 22 times forward earnings. You telling me we can't do better than that? 22, that's my choice. I won't take it. Not a Democrat by any means. But you can't be lying to our face on some topics like we're just going to disregard. Many people do. Many people do. But that's politicians, right? What price target will you use for TLT for end of year, assuming another 50 basis points? 100 to 102, I think is fair. Investments in CDs and money market funds, fixed income growing mostly to capture the last moments of high interest. Could be. But I think there's more to be made in duration than the money market rates now. You have mentioned it, so sorry for repeating it. In a scenario of exogenous event, let's say Iran, what will be the impact on inflation and rates? No clue. If U.S. has to fund a war, will it increase, decrease inflation? No clue. I have no clue. None at all. You can make the case that it'll do nothing. You can make the case that it can go up. You can make the case that it'll go down. We have enough information now to make any case we want. No clue. Is a CFP a worthwhile career? No, I think you'd have to ask a CFP. I don't know. Where are we here on time? 2.5 hours in. Not that many questions ahead of me here. Let me speed up a bit. Regarding my previous comment about the interest deduction, I'm comparing it to the implied rate and options, which you can't deduct. What does it matter though? Again, you have to spend the money to deduct it, so you're still out the money, right? Brokerage margin rate after deducting interest is less than the interest. You are deducting the interest on the futures or on the options. You are deducting it. If you buy if you use a synthetic, the interest rate is in the options. Your capital gain is calculated on what you paid, which has the interest rate in it. So you are actually getting the deduction because your capital gain is less by the amount that the option is higher by, right? So you are still getting it. Opinion on NVIDIA CEO saying, don't go to school for computer science, just to learn to use AI. People that know how to use AI will succeed more. I agree with him. I mean, why would you go to school just to learn how to use that? Just go ahead and use it. I agree. I think there's a lot of things you can just disregard going to school for. I think there's a lot of things. I think computer science in general is one of those things you could just avoid going to school for. I say that because I have an undergrad in computer science. I learned C, Unix, Java, JavaScript. I mean, I learned all that stuff, and you can learn that on your own today. You can learn all the computer languages on your own today. You don't actually have to go to a university to learn it. You can do it all on your own at your own pace. I see no purpose in a computer science degree. If you want a job as a coding, there are tests that can be given to you in the room that you're sitting in. Here's a laptop. Here you go. Write a script that'll do this. Off you go. Let's see what kind of function call you can write to get this thing done. You can test that right then and there. I don't think you need to go to school for computer science at all. What is the collective IQ of Tesla shareholders? It's low. Can it be an extreme left tail on the? Yeah, could be. Yeah. Although you could say I'm the stupid one, right? You could say no. These are smart people. I'm the stupid one. because I'm not smart enough to play the shareholder. That I should have been smart enough to look at it and say, you got to buy Tesla, not because Tesla's a buy, but because the shareholders are going to buy it because they're sheep, and you got to play the sheep. So, you could have some sharks out there saying, no, Meldrum's the stupid one. I mean, he couldn't see that this was an easy play. He's not a poker player, because when you play poker, you don't play your hand, you play the other people's hands, right? A good lawyer will never argue their case, they'll argue the other case. They bring the fight to your doorstep. That's what I should have done. I should have bought Tesla, saying, well, look, you got these two events coming up. Based on what I know about the simple-mindedness of the Tesla shareholder, they'll bid this thing up. I should go for a ride, knowing that I'm not betting on the company. I'm betting on the sheepishness and the herd mentality of the Tesla shareholder. So maybe I'm the stupid one in all this, right? How did we went about to get your first job? What was the process back then? My first, well, I don't know. Your first job was, I had a paper route. Really. Then I worked at Canadian Tire, and this was in high school. It was an easy job to get. I mean, that's what they did. They hired, you work in the stock room in the back. You stock shelves, mindless job. Most jobs I could get, like I didn't really, through university, I worked in restaurants and nightclubs for the most part, waiter or bartender. When a job was hard to get, I remember one time, the jobs were hard to get. Every restaurant job that opened up, there'd be 50 people putting in resumes. I remember saying to the person as I dropped off my resume, there's a whole line of people. I said, I have experience. I said, here's what I'm willing to do. I'm willing to work for you for 2 weeks. And if I'm not one of your top performers, I'll leave, no questions asked, and you don't have to pay me. I got the job right then and there. I got the job just by saying that right then and there. And then I kept, after you're there for 2 weeks, they're not getting rid of you. But I said that. I said, I'll come and work for you for 2 weeks. And at the end of 2 weeks, if I'm not one of your top performers, I'll leave. You don't have to pay me. And that was that. What was young Mark like? Immature, naive, but kind, overly kind, I think, at times, to my detriment. I wasn't, you get used a lot for all sorts of things, but you live and learn. I was a partier. I liked to drink. I enjoyed the party, sometimes a little too much, and you make mistakes of which you try to mischaracterize after. I mischaracterized a lot. Got caught mischaracterizing a few times, but you mischaracterize over your mischaracterizations. You try your best. Everybody in their 20s behaves that way, right? Did you watch Why Canadian? No, I didn't. I didn't. Is Bloomberg more insightful than Wall Street Journal, Financial Times? No, I wouldn't say that. Bloomberg is more passive. Like, it just plays in the background. For everything else, you actively have to read it and pay attention, but it just plays in the background. So you can just block it out. If it's something you're not interested in, you just block it out. Sometimes something happens that, if there's breaking news, you hear about it there. But no, I would say that if I had to pick sources, if you had to pick just 3 sources, Wall Street Journal would have to be there. Financial Times, I've been so disappointed with them. I'd say Barron's, Wall Street Journal. And, for the Canadian side, Globe and Mail, the Globe. I'd say that's really about all you need. If you're in Europe, I guess Financial Times, but I'm just not a Financial Times person. When we get sunset streams again, when there's a sunset, for God's sake. November house tour. I got a lot of work being done. I got the front fountains, all the little stones being chipped out. Got this beautiful tile that's going in the fountains. That thing is going to pop nice and blue. The theater is being redone. There are blinds that come down to block out the whole room if you're watching a movie during the day. The projectors are being replaced. The blinds are being replaced. The chairs in there are going. New ones are coming in. There's this wicked art installation going up on the wall. I got this big white wall. When you walk up the stairs, it's just this huge white wall. This big art installation is going up in there. So there's work being done, and I'm not going to do a house tour until I'm all done. So sometime in the spring, I'll be ready to do a house tour. And this week, I got to deal with the water pump because my water pressure sucks. And it's my control panel on my water pump that's a bit of an issue. So I need a new control panel. But I live here and I'm white. So my price is $5,000 US. However, my neighbor, who is a mechanical engineer, came over, looked at it, said, this thing here that you're looking at, you can get it for 500,000 or 600,000 colones. With installation, everything all in, you're about 700,000, 800,000 colones. And, that is $1,400 to $1,600 US, not 4,800. I have a luxury tax based on, when they see the place, the price goes up. And then I got a white person tax. Oh, you're not Costa Rican. You're one of them white people from North America. Well, you're going to pay more because you guys are pretty stupid and you got a lot of money. You're not going to know the difference. We have a lot of money, not because we spend a lot of money, but because we're not stupid. But, anyways, that person's not going to get the sale. But you got to deal with that down here. Everybody wants a piece of you. Everybody. Why do you wait until 3 p.m. to eat every day? Intermittent fasting. And as soon as you go past 12 hours, your body is done burning any extra sugars it has in its system, and after that, you're purely fat burning at that point. So the longer you can go after 12 hours without eating, the more fat your body will burn. So I try to push it to 16 hours. So I don't eat till 3 in the afternoon. I can get there fairly easy. It's not that bad. Thoughts on investing in nuclear in 2025? I think it's probably too early by 2025. Just seeing your LinkedIn post, I think I got an email. What should I do? Contact support at markmeldrum.com. Have you met any of your role models? No, I haven't. Any finance newsletters you're subscribed to? Not finance newsletters. I get Splash 24/7, which gives me a daily highlight of the headlines in the shipping industry. I get Automotive IQ. I get Manheim, a bunch of stuff from the auto industry, and then I'm subscribed to all the companies for all of their releases, things like that. But no, I don't think any finance newsletters. Talked about dock workers strike. Any opinion on Boeing? No. Boeing union is trying to hurt their own company. Yeah, but no, I don't really follow that Boeing at all. I caught a Russian spy and had a heart attack. I caught a Russian spy and had a heart attack at a random university pool. The government thought I would see an angel, so they wiped my You gotta stop drinking while you're listening to me, people. You gotta stop drinking. My God. Speaking of lying politicians, I mean, you could start almost any sentence like that, right? Speaking of lying politicians, it's wild to see how fast some of the premiers in Canada flipped on the carbon tax as soon as it became politically unpopular. Well, it's bandwagons, right? This is what politicians do. They tend to jump on bandwagons when they drive by, and then they start preaching and moralizing like they've always been there. Do you think the U.S. government will pass the bill that restricts politicians on buying individual stocks anytime soon? No. Subscribe to level 2 plus November 23, didn't receive an email. That's because you have the level 2 plus. You already have the applied level. You don't need the email. You already have access into perpetuity for the applied level. If you already have the applied level, there is no repeating fee on that one, or recurring fee. You have it. Do you think Marcus Aurelius is a politician king working in the interest of people? No. I mean, if he, I think almost all politicians were self-interested. But then again, I mean, I don't know enough about it, so I'll retract my answer to that and say I don't really know. 95 IR cut with S&P at all-time high. Sent the market soaring 2x over the next 5 years. 95. Oh. Any parallels? Well, you had much more reasonable politics. You had much lower debt. You had fewer places in the world to go. China hadn't entered the World Trade Organization till 1999, 2000. I don't know. Correct interpretation of silver production to paper silver ratio. I don't know. I don't know anything about silver. Any China ADR? I don't know anything about China. These are easy questions. Do you invest in small or mid caps? Not really. Just large caps, yeah. You can go back to school and take something just for fun. What would it be? History, a bunch of different history, archaeology. I think that would be fun. Yeah, something like that. What is your opinion of gold prices? Don't know what that means. What's my opinion of them? I don't know. They are what they are. I don't know that I have an opinion on them. My opinion. In what way? Like, when you ask for my opinion on it, like if I say, well, what's your opinion on the sun? Like, well, what do you mean my opinion on the sun? If you were a bit more clear on what particularly about gold prices. I saw a news story that mentions immigrants in the U.S. are finding it difficult to compete versus other immigrants for similar work. It's pretty much the same in Canada. Yeah, it's pretty much the same in Canada. Thoughts on the Canadian economy, housing? Are you coming back? Oh, yes, I'm going back, but I'm not going back to live. I mean, I have a house there. I don't know enough about the Canadian economy. I know that sounds weird, being Canadian and living in Canada, but I've spent most of my time in U.S. markets. I know that quite well. I don't know much about Canada. I don't know much about it at all. Very little. There's just not the opportunity in the Canadian market as there is in the U.S. market. FRM, a good addition to CFA if you're going into banking. Yeah. Thoughts on working at RBC? I've never had a job in the real world. I couldn't answer that question. Any particular hobbies you enjoy apart from financial markets? Not really. Don't have the hobbies. So you can always capitalize on sheep herd behavior of the manic shareholders until you can no longer. I don't know when the Tesla shareholder will be disappointed enough to say, I'm done. If you're an investment advisor, if client asks what will happen to rates and inflation with war, how should you respond? Nobody knows. That's how you should respond. How do most respond? How to have an edge with insight, in your opinion? How rates will respond? I have no clue. I don't even think that's the interesting thing to think about. What will not be affected? Domestic utilities, and it's already a winner. Duration, and it's already it pays, and I think it's a winner. A war on the other side of the continent is not going to affect much here. That would be my base case. I don't know that I would change much at all. But I don't know that I'd be trying to forecast where inflation is going to go. I would think, if inflation goes up or inflation goes down, where would I like to be? And when I find that if inflation goes up, I want to be in these things. If inflation goes down, I want to be in these things. And this is in both. So I'm going to be in that. Right? So off the top of my head, I don't know. This is an exercise in reflection and thinking. But I don't see this as causing any issue for a North American market. The war isn't going to be fought on American soil. If there is a war, I doubt the U.S. is going to get involved. The U.S. may supply arms, but I doubt the U.S. is going to put boots on the ground in the Middle East after getting out of these endless wars. I don't think it has the appetite for that at all. So I don't think that's going to happen. But it would shoot the price of oil up dramatically. So you have that, but it won't affect utilities. There's where I want to be. It won't affect apartment REITs. There's where I want to be. It won't affect the home builders. There's where I want to be. Right? And then I'm not going to worry about the other stuff. What are some of the best ways to securely store physical gold? I don't know that you can actually own physical gold in the U.S. I think it has to be somewhere, unless it's in finished form. So unless you're buying it in the form of jewelry or a coin, of which case you're paying a significant markup for it. But if you're buying gold, and physically owning it, don't tell anyone. That's probably your first line of defense, is just don't tell anyone you have it. So I'd say a bank safety deposit box would probably be the best place to put it. Any thoughts on the waste management industry? No. All this stuff about tracking shares, that politicians are making money. Duh. This is. So you're telling me that politicians are using their position to self-enrich? Tell me it ain't so. Shocked to find out there's gambling going on here, right? Duh. Were you always curious about finance or something detrimental? Detrimental? No, I was always drawn to it. Did you get any feedback from CFA on your scathing critique of level 3? No. How many years do you have left on your deal with Serify? Well, it was a 5 years, so 2.5. I'm pretty sure you're leaving CFA teaching after. I don't know. It's hard to know what you're going to do. It's hard to know, from one day to the next. I know that my future is more aligned with the applied level at this point. Warren Buffett, money on sidelines, succession planning or something strategic. I don't know that would be succession planning. Best book for understanding business analysis, according to you. Business analysis of what? What are you analyzing? I mean, that's a big word, business analysis. That's such a big word. I mean, I could take that in a number of different directions. How do you see opportunities for making money in U.S. market compared to the world? There's another question that's got an easy answer. The U.S., there's plenty of opportunity in the U.S., plenty of opportunity. I don't need to go hunting around the world. Do you prioritize risk or return? Risk. That one is easy too. I don't see any event in the Middle East spiking oil. Do you think it is for medium long-term investor to analyze or anchor on the potential outcome of a presidential election? Not really. Why not? Yeah. The markets are going to be what the markets are going to be. If you're medium to long-term, you're investing over a couple of cycles. Unless you're playing certain risk events, the market's going to be what the market's going to be. I don't know that I would. If I were investing for 5 years, I don't know that this election would really bother me that much. Someone that wants to get into options trading as a beginner, where do you suggest they start from? Start small. Well, I mean, other than the standard advice I think your grandfather would give you, right? Start small and learn. Learn first and act second. And I don't know. As a beginner, you need education. Make sure you know what you're doing, I guess would be. But I mean, this is advice your grandfather could give you. As a beginner rock climber, what do you suggest? Start small. Be careful. Don't go climbing the Matterhorn on day one. Start with a small hill. As a beginner, weight training, what do you suggest? Start light. Start with light weights. And I mean, it's such an obvious answer to a question that seems set up for that. It's kind of like, you can ask your grandfather that. Whatever advice your grandfather gives you would be the same thing. I don't know that just because it's options, it would have a different answer, right? Haven't you thought about building a little woodworking shop outside your CR home? Why the hell would I want to do that? What makes you think I'd be into woodworking? No, not once. Never looked outside and said, woodworking. No. No. I don't know where. I don't know. Maybe it'd be a fun hobby for you. I don't see woodworking as fun. No. Do you play poker? Not as much as I used to. And that is the end of the questions. There's one about IBKR Trader Workstation, but the graph below shows how your portfolio changes to SPX percent changes. How do you use that? I don't. So, yeah, I don't. Oh, these last few have been easy. Either it's no, I have no idea about that. I have no opinion about that. I don't know about that, and I don't do that. Where are we here? TLT flat, SPY. SPY's turned negative. Tesla's selling off. They were up 263. They're 261, but yeah, I don't know that that's going to hold. Where are our metals? Ooh, copper. the shine coming off copper only up less than 4 cents. It was up as much as 17 cents a pound earlier, only 3 cents. Platinum and palladium, this surprises me that it's just not going along for the ride at all. Gold selling off was up $17, $18, only up 5. This is odd. Let's see what currencies are doing, because currencies usually give me some indication. Canadian weaker, and I am short the Canadian, thank you. The peso weaker, which it should be. The not the peso, sorry, the yen weaker, the peso weaker. Looks like the US is picking up some strength. Bitcoin's usually a fairly good barometer of risk, down 2%, 1446. Has there been a headline somewhere that I'm missing? Should I go looking for some news? Is there something I should be aware of? Let's see if... no, I don't see any news that came through. So there's been a shift in tone. I don't know. Is there something in the Middle East I'm unaware of? Let's see. Anything about the Japanese market? Not really. Seems to have kind of awoken in the last year. Yeah. Yeah, the boom in Israel. Why did something go off in Israel? Did bombs go off in Israel? That would be something if they actually went off. Well, I think we'd be a lot worse than what we are right now. Where's energy? Flat. Yeah, well, the shine has sort of come off the market in the last little while that we've been talking. Oh, yeah, down 4 points. It's hard to tell on Sunday night what any of this means. Not until the Americans show up do we actually have any direction. Anyways, that's it. It is 3 hours in, and I will end it here. And I will go drop my clicker off at the security gate so that the incoming person can get in the gate. Ciao, everyone. I'll see you next Sunday.